Welcome, everyone. Kevin and I are ready to go. Another Financial 15. You know how these shows work. We want to improve your knowledge, help you with your finances, and do that in 15 minutes or less. And today we're talking about the first-time home buyer's plan. What is it? How do you use it? What are the rules? We'll go through all of that. You want to stick around.
Yes, in one of our recent RSP videos that we had made, we did touch on the first-time home buyers plan. And of course, this becomes a lot more involved. We figured we could do an entire video on it. So we want to do that now. If you want to check out any of our other videos, please go to our website at beckerorr.com or like us on Facebook, or always visit our YouTube channel. There's tons of content there for you to see, and hopefully we can help you out. But for today, Clint, the first-time home buyers plan. This is something that we can access. What is it?
That's a great starting point. What is the first-time home buyer's plan? Well, you can see it on the screen there in a very broad sense. It's a program that lets you take money out of your RSP, no tax consequences. You can just take the money out of RSP and you can use it to buy a house, or you can use it to buy a house for a family member that has a disability. So it lets you take money out of your RSP without tax and put it towards a home. That's the details there in a nutshell. Let's get into it into a more detailed, more nuanced approach here, Kevin. You can take up to $35,000 from your RSP. That number was originally $25,000 a few years back. Federal government increased it, so you can now take 35 grand out of your RSP. And it doesn't matter where the RSP is. You can have 17 different RSP accounts across different financial firms. As long as your total is $35,000 or less, you can use it with this program. Of course, no tax on the money that comes out. You do have to pay the money back, however, over a 15-year period, and not all RSPs qualify. If it's a locked-in RSP, a LIRA, or part of a group RSP plan, it might not qualify for this program. The idea is you've done some of your own savings in a personal RSP. The intent is that's the RSP, that's the money that you can now pull out and use towards the purchase of a home. So that's kind of the overview, Kevin. Who's eligible for this program?
Well, that's exactly it. It must be who's eligible. We must consider what a first-time home buyer is. And remember, if you're buying it jointly, if you have the $35,000, well, if you and your spouse, now you can technically do $70,000, something along those lines. But some of the important things to remember are a first-time home buyer is somebody who has not owned a home in the prior 4 years. So if you, your partner, have not had one, and you've been sitting there renting for a long period of time, you now qualify in that 4-year time frame to become a first-time home buyer. Yeah. That is one important point to make sure you know. And again, the 4-year period that we look at always starts on a calendar year. So for an example, if you bought for March 31st, 2020, the 4-year period begins January 1, 2016, and would end the month before that. So remember that is the 4-year period. If we use December 31st, it would still start January 1, 2016, but now we go to November 30th, 2020. And that's an important point to know. So that's a big factor to consider. What is a first-time home buyer? What are the other eligibility requirements we have, Clint?
Yeah, there are a couple of those. The first one there, what is a first-time home buyer? That 4-year period, very important. In addition to that, you have to be a resident of Canada. Also, you have to have a written agreement to either buy or build a qualifying home. Some details there. The home has to be in Canada. You can't buy a home in Arizona and use this program. It has to be in Canada. It can be a mobile home, a townhouse, a condo, a semi-detached, a fully detached home. Lots of options there. But what is it when they say buy or build? Some details there. You're considered to be buying or building a home under this program if it's done before October 1st of the year after the withdrawal. So you take money out in 2020, you've got until October 1st, 2021 to either buy a home or to build a home under this program. You don't meet those criteria, there are consequences. So to stay on the good terms of this plan has to be done by October 1st of the following year after the withdrawal. What are some of the other details here, Kevin?
Yeah, I mean, that's a big factor to know as to when you got to get into the home. And as we say, this must be intended as your principal residence within the year of buying. So if you're staying at a cottage or something along those lines, this will be your principal residence come that time frame, so you can utilize it. Also, if you previously participated in this, you can do it again if all the funds from the prior home buyer's plan were repaid by January 1 of that year of withdrawal. So again, you have a 15-year time frame to do it. This could be happening over that scenario, but you have to make sure that those other previous funds were done. And finally, any RSP contributions must stay in your account 90 days before they're withdrawn. You can't put it in tomorrow and take it all out the day after. They have to be in there for a while so that you can actually access what this is that we can deal with for the home buyers plan. Those are important eligibility requirements. What's next on first-time home buyers we need to know?
Yeah, there's lots here. We're hitting some of the details. Keep in mind, you can go to Canada.ca, look up the first-time home buyers plan to get the full details, because there are more than what we're talking about. We're trying to do an introduction to the topic here. And on that last point, Kevin, a reminder, the RSP, you get a tax deduction when you put the money in, and then this program allows you to take the money out without tax consequences if you're using it for a home and you are a first-time home buyer. So they have that 90-day window, because you can't just put the money in, claim a tax deduction, then take it out tomorrow to buy a home. It's got to sit in the account for at least 90 days. Otherwise, it will not qualify. And then you have to pay the money back. You're essentially giving yourself a loan. That's really the crux of the program. You're taking money out of the RSP, and then you got to put it back into your RSP. It's a 15-year window. That's how the repayments work. It starts the second year after withdrawal. So you take money out, let's say March 2020. Well, in 2022, that's when you have to start to repay the funds. You can do it earlier if you like, but it has to start in 2022. And all they do, it's a simple formula. They take out whatever amount you withdrew, divided by 15. You take 15 grand out of the plan, out of your RSP for a first-time homebuyer program. They divide that by 15. It's $1,000 a year that you have to repay until the full amount is repaid. That's how the formula works. What are some of the other details here, Kevin?
Yeah, again, I mean, things along the lines is that this is money you've taken out, and you've taken it out without the tax. Now you have to pay it back 1/15 a year each year. But every time you put it in, you cannot claim an RSP deduction again. It has already been claimed the first time, so you cannot get double that tax or tax-free sort of money coming out. So the money has to go back in, but there's no claim for that. Also, if you fail to make that on any year, that amount of money will now be included in your income, because technically you took it out without any tax. You should have tax on it if you're taking out an RSP other than this program. So it does have to be included into your income, and that will up, and you'll have to pay tax on it eventually from there. Also, you'll lose that room that you would have had beforehand by not repaying it back. So those are some other rules that we want to work on that repaying of the withdrawals.
Yeah, and there is a statement. So if you're part of the home buyers plan, every year CRA will give you an update, a statement of your account. It comes with your notice of assessment. So you file your taxes, you get your notice of assessment shortly thereafter. The home buyers plan statement will be included with that. You can also check it online if you are registered with CRA for your online account. And it's a pretty straightforward statement. It'll show you how much you took out, it'll show you how much you've repaid, and it'll give you the remaining balance. And again, these are the details in terms of what is stated by the program. You can start paying back earlier. You don't have to wait for that second year. You can pay back more than 1/15 per year if you'd like as well. All of that is permitted, but these are the minimums that you have to do. And as Kevin mentioned, if you don't meet those minimums, if one year you just don't make the payment back into your RSP, well, they're going to include that as income for that year in terms of taxes, and you will have to pay the associated amount of tax. So it makes sense if you take the money out, you're going to want to pay it back over the appropriate time frame. Otherwise, it could be creating a tax burden in the process. And you have to apply for all of this. There's no government program without bureaucracy, Kevin. That's what I've learned. There's always paperwork involved. And what's here, I'll put it on the screen here. You can help us out. This is the form, I believe, to apply. One of the ones you'd have to fill in if you want to do the program.
Exactly. And I mean, the biggest factor to remember is this is not just a normal, I'm calling in to take money out of my RSP and I'm going to use it to put on a home down payment. Because anytime you do that without any sort of formula or paperwork to it, the government's going to say, well, this is a normal withdrawal. We're taking all the tax off, and then you can deal with it as it can. So you do have to apply for the home buyers plan. That way they can check out all the rules that we basically put out there beforehand that we've explained to you for eligibility. And also in regard to that sort of a scenario, they have some sort of an idea as to what your RSP is, how much you can take, and why you're doing it. So the T1036 home buyers plan request form for withdrawals is the first one that you have to put out there. And then once that is approved, then you can take the money out. Because as I say, if you do it beforehand, you're going to be screwed, because they're going to take money off the top. You're just going to put the money in, and you're never going to be able to put that money back in your RSP, because once it's used, it's lost, as it would sort of be scenario. So that's the scenario that we want to deal with on the withdrawal. Now, if you're putting money back in, do we have to apply for a form as well, Clint?
Of course there is. There's forms for everything. It's a bureaucratic program. Well, if you're just doing the regular repayments, that 1/15 per year, you don't have a special form. But if you want to pay extra into the program, you want to pay it off faster, you want to start earlier, all of that's permitted, but there are forms involved in order to do that. It's a very long title. You can see it on the screen there. It's essentially Schedule 7, where it has to be noted and applied in your tax return. And the reason for that, let's say you owed $1,000 into this program and you put $5,000 in your RSP that year. The government doesn't know if you wanted $1,000 to go towards your repayment and the other $4,000 to be a regular RSP contribution where you get the deduction. So you have to make sure that Schedule 7 is properly filled in to say, nope, I wanted all $5,000 to go towards my repayment of my home buyer's plan loan. So that is important. If you're going to pay extra and you want it to go faster against your home buyer's plan, you have to fill in the appropriate document to reflect that. So that was a lot of detail in a very short period of time. So if there are questions, where do you want folks to get a hold of us?
Yeah, I want you to come and visit us at chatwithclintonandkevin.com. We would be more than happy to answer the questions on this. This is a topic that has a lot of involvement in it. We've just sort of scratched the surface to it, and it is becoming more and more popular all the time right now, based on the fact that you've got an average house price in Canada north of $700,000. So getting sources to put that money down to be able to buy the house, this is one that you can access and utilize. So we're more than happy to answer questions on this or any other topic you can think of off the top of your head. And please visit us, because we're more likely to be able to come up with some sort of an answer, hopefully, than nothing at all. Clint, do you have any final closing points?
That's optimism for you. We're optimistic, Kevin, optimistic. We're going to come up with some kind of answer. Get a hold of us. There we go. Well, I appreciate people tuning in. We'll be back again shortly with another video. Until then, everyone take care, stay safe. We'll be back soon.